All right, so tonight we talk about GIG CFI products, and for people who join us for the first time, GIG is about a movement, and the movement has the GIG Institute, which protects the training or online training of everybody, and the CFI is the bank, and in the club is what we do tonight. Now, every Sunday night, you'll see that we focus on growing the group to 1,000 plus. So our next goal is to become a cooperative bank. We're already a registered CFI, but at 1,000 members, we will become the first cooperative bank in South Africa with a national license. Now, the talks that we do on Sunday night is about your journey in GIG, and we call it the legacy as a house. The house needs a foundation or philosophy. It needs walls of wellness and wealth, and it's a roof which determines your worth or your purpose as a family. So, so every talk we do fits in with one or more of these building components. So put your own name there in the right hand, the house of, put your name there, Jasper or Sunny or whatever your name is. And that's your family house that you're building. And although our houses might differ, it needs the same building components. So tonight, in terms of products, I want you to write down www.gig.coop, and that is our bank website. So if you want to find out about what products are there and what are the rates of the and what interest rates you can get, that's where you must go to. I'm going to just quickly, now that I've to go it, I'm going to discuss tonight about the various products of the GIG CFI, so all our financial products and services. So just for those who don't know it, about 3 weeks ago, out of the blue, we were surprised at the banking in Durban that we won the award for the best performing established cooperative financial institution in South Africa, which is quite a big blessing for us, which means that our road towards the next step to become a cooperative bank should be much simpler. But what are the financial products of GIG? The first product is our lump sum savings, where you can bring a lump sum of money and invest it for 6 or 12 or 24 months. Now, to find out more about the interest rates, if you go to that website I showed you earlier, under rates, you'll see savings, and there you see this current rate for 6-month fixed deposit is 9%, for 12 months is 5.5%, and 24 months it's it's 3.4%. So it will be, as whenever the Reserve Bank its prime rates, it will also affect our rates, because with this money, GIG then buys retail government bonds to protect your capital and guarantee your interest. So at the time that you have the money to invest, we will be able to give you a quote that will then be correct for the period of the quote. So the next product is our 32-day call account. And to understand the 32-day call account, think of it as your war. It's your personal place where you then put money towards a personal project like Christmas gifts or school fees or whatever you save money towards. You can top it up. You can put lump sums in. You can put give GIG instructions to deduct regular amounts on a regular basis. While the money is in the account, it will earn interest at 2.8% per annum. And when you need to call it up, you just need to give an email instruction to back office, to manager@gigtrust.co.za, and within 32 days, it will be paid into your account, and you can call up all the money or a portion of the money. It's all up to you. So that's still the easy products. Now we're getting to what I call our sophisticated products. The one sophisticated product that we work with is called the investor account. And just to tell you more about the investor account, because people are not really excited about savings per se, we changed it to call it investor. So you can open up an investor account by writing to manager@gigtrust.co.za, and they will then open up an investor account. And the moment we get notified at GIG Institute that you have an investor account open, we start treating you as a member of our GIG Investor Club. But understand, while your money is in GIG, you don't earn interest on amounts less than 2,000 Rand, but above 2,000 Rand, you earn 3% interest per annum. The purpose, however, of the account is not for you just to keep your money there and do nothing, but it's from there to be notified of forthcoming opportunities. So we at GIG Institute have a bunch of specialists who research opportunities, and when we find something that gives you above market returns, where the risk is mitigated, and we're happy with our members, we then bring it to our members, and you can then decide to invest or not. So it stays your money. Nobody can touch your money. Nobody can invest it on your behalf. It stays your money. But one of the opportunities that we have brought to our group of last year is called the Cattle Feedlot Project, where for as little as 500 Rand, you can invest. Your money is then tied up for 12 months. The company that we work with is a professional company that's been doing it for the 3 years. They then take the money, and they have 6 money intakes. The next one is now coming up in April. And with that money, they buy cattle, calves, they fatten them at the professional feedlot company. The feedlot company has part of their service level agreement, a guarantee that the mortality rate of the cattle is kept under 1%. So there's a lot of checks and balances built in. And then for 12 months, your money, during that, the cycle is repeated at least twice, where the calves are fattened, slaughtered, and the money reinvested. And then at the end of it, you then share in the growth of that specific investment batch. And the average return for the last 3 years was between 10 and 15% per annum for the people who invested. Now in time, we will not just have one opportunity. As the club grows and we have more and more money, there would be opportunities number 2, 3, 4, but it will always relate to either a business opportunity or a property opportunity. And various investors, you could say yes to this opportunity, no to the next one, but over time you build up your own portfolio of investment. Just understand, the moment you decide to invest, the risk is no longer with GIG. GIG just protects your money while it's in the account. The moment you take it out to invest in the opportunity, that risk goes over to you directly. All right, so that's the GIG Investor Club. And as I talk, please make notes on the sites if there's anything that you want to ask, or put it in our chat box. And then when we have questions and answers just now, then we can discuss the various products and services and also answer you. So that's the GIG Investor Club. Now I'm going to come to our flagship product, the Loan Link Share. So the Loan Link Share, just to get everybody on the same page, there's a few basic rules that you need to know about. You can only participate in this product once you have saved or contributed for about 12 months. So you invest money at 0 interest, therefore we can lend it out at 0 interest to our members. After the first 12-month period, you qualify for a potential interest-free loan of up to 2 times, provided you have completed your 12-month action plan. It's recent and updated, because if you fail to have an updated 12-month action plan, your loan will be restricted to a one-time loan, but you can easily retire when you get there. But it becomes important for us to know that you are serious about your own journey. So something you need to know about this loan is that there is a cost. There's an administration fee payable on every loan application for amounts less than 3,000 Rand. it's 10% or 300 Rand, whichever is the biggest. So in this case, it's 300. And for amounts 3 to 5,000, 9%, 5 to 10,000, 8%, 10 to 20,000, 7%, 20 to 30,000, 6%, and 30,000 to 50,000, 5%. And then from 50,000 and up, we work on 4% or 2,600, whichever is the smallest. So you achieve the 2,600 limitation with an amount of about 65,000 loan. So we are not different from any other bank. Every bank has an administration cost, and it all adds up to the overall cost of capital when you start borrowing money. The only difference here is there's no further interest to be added. There's a further limitation on this product that if the loan amount exceeds the member security, in other words, if you've saved 10,000 but you want to borrow 20,000, it means your loan exceeds your security. Then there's a further once-off 3% provision for bad debt on the total loan amount. And that there's also just a note that the current 2 times loan facility is a temporary measure due to COVID, but it may be reinstated back to 3 times once there's more certainty in the economy. So before COVID, this specific product, people could borrow up to 3 times. So we've just temporarily brought it down to 2 times. All right, so once a member has repaid his first loan link share, his first loan on the loan link share, he can immediately for a new interest-free loan, but now the repayment period is adjusted for up to 7 years, depending on his loan amount and his period of active membership. So this is a further checks and balances that we built in at board level to ensure that there's always enough cash flow to give everybody a loan as they apply. So the current criteria works as follows. For people who borrow less than 50,000, you can have a loan eventually up to 7 years or 84 months. So every year that you've been a member of GIG and the loan amount that you borrow is less than 50,000, you eventually get up to 84 months. If the amount is more than 50 but less than 100, you have to repay that in 5 years. If the loan amount is more than 100 but less than 200, you have to repay it in 4 years. 200 but less than 300, you can repay it in 3 years. And then there's a restriction on large loans that all loans above 300,000 must be repaid in 24 months. So how it will affect you is when that's calculated and the repayment per month is calculated, you must be able to prove that through your cash flow, you can actually afford to pay back the loan. But it's also a way to protect the cash flow for the group so that there's always enough money flowing in that we can lend out to the next people. A member can choose to accelerate repayment of an existing loan without penalties. Once a loan has been repaid, the member can qualify immediately for another loan. Also note that GIG is licensed with the National Credit Regulator, the NCR, and members with an impaired credit record will only be able to make loans against the one-to-one security until their record has been cleared. Also note that the Cooperatives Bank Act placed a further restriction in that any loan cannot be more than 10% of the assets of the CFI. So we'll bring all of that into context a bit later with some examples. So to look at what is this cost of effective capital, understand that the administration cost and the provision for bad debt is a once-off cost added to the loan right at the beginning of the loan. So when you take out the loan for the first year, you have to repay the capital back in 1 year. So that's what this table says. And if it on the left-hand side, we said a typical loan of less than 50, a typical admin fee would be 5%, bad debt provision 3%, it would add 8% to the cost of capital. But because you are below 50,000, if you are now taking the next loan and the money is added up once, but now you repay it over 2 years, the effective cost of capital is now down to 4%. By the time you pay that loan over 3 years, the effective cost of capital is 2.7, then 2%, then 1.6, 1.3, 1.2. Now, so although there's always a small cost of capital, this is an amazing product that can help you to invest in income generating assets later on because of this low cost of capital. For people who borrow more, can afford to borrow more, in your case then, if it's up to 100,000, that means you have to pay it back within 5 years. So your the admin less, bad debt remains the same provision. It's an internal insurance that we do to protect everybody's capital. And so the cost of capital effectively for, if you take the first loan on the first year repayment, is 5.6%. But by the time you remember for 24 months and you repay over 2 years, cost is 2.8% and it comes right down to 1.2%. Then for the 100,000 to 200,000 mark, admin fee comes down drastically because it's now capped at 2,600. It works out at 1.3%, and the cost of capital is that, and the cost of capital over year 2, 3 come right down to 1.1%. For the 200 to 300,000 mark, it comes, admin fee is almost now becoming negligible. Cost of capital for the first year is 3.9%, coming right 1.3%. And for the above 300,000, the cost of capital comes right down to 1.8%. At the back end, so that a lot of people say, but you say it's interest free. Yes, we do say it's interest free. We're not adding interest to this a cost, but you do need to understand there's an admin fee and there's bad debt. So the longer you stay in GIG and the more you make use of this facility, the more you benefit from very low cost capital. All right, now let's look at how do you apply loan link share. So loan link share is low cost capital. So the first thing you need to do with that money is pay off high interest debts, like credit cards and overdrafts. Typical credit cards and overdrafts can run in the area of 20 to 30% per annum. Once you pay that off, the next thing is you can use it for working capital. So some of the members in our group now are small, medium enterprises, business people. So typically once a year you need to replenish seed or you need to replenish stock. And these are assets that you can then convert back into money within a 3 to 6 to 9 month period. And that's a good way of applying your own money. You choose your own funding facility by how much you invest in the loan link share. Another way to apply it is in high growth investments. Like we said, the Investor Club opportunity. So where the project of the cattle feedlot can provide us with 10% plus per annum. And also any future projects that we bring to the table, we will make sure that it will beat inflation plus 3%. But look at the effective cost of capital, where whenever you have an opportunity to invest low cost capital into high return investments, that is what Robert Kiyosaki referred to in his books as a good debt. So you use debt to make money work for you. Another one is to buy big ticket items like buy a car, buy equipment, buy furniture. So instead of paying it off at excessive interest, so many of the big stores out there make their money really not on the markup on the products, but on the financial costs of providing you with the facility to borrow from them and pay back. Now, if you do it at low interest cost or low capital cost, it's a huge saving. Instead of paying back the equipment twice in 6 years or 7 years time, you only pay it back once. And then group loans. So group loans is an extension of loan link share, where let's say there's 10 friends in a circle working together and they each have saved 10,000 Rand. After 12 months, they can borrow up to 20,000 Rand interest free. If they then combine their lending ability and each one borrows his 10,000, his 20,000 times 10, they will have effectively borrowed 200,000. They can put it down on a investment like a business or a property, and each one in his own right is responsible to pay back his 20,000 rand, but they've combined their ability, and that's what it's called a group loan. All right, peer-to-peer loans. That's an interesting product that doesn't get a lot of attention in GIG because people don't really understand it, and it's one of those chicken egg situations because you can't have investors if you don't give them something to invest in. And so how do we bring it all together? In theory, it works as follows. On the one hand, there's a lender, a person with a project, and the project return on investment, but the lender cannot come right with financing from the bank. And at best, he ends up in the hands of the Capitex and the African banks at almost 30% per annum interest. On the other hand, we have an investor that at best, at GIG with retail government bonds, we can maybe give him 4 or 5% interest per annum on his money. So there's a huge disparity between his ability to earn money on his growth on his money and another person who has to pay high for the cost of money that he wants to borrow. So if we can find the perfect match, and I'm just giving an example of, let's say someone has got a contract with a hospital to do blood analysis and machine cost 500,000. And if we then have an investor and even more than one investor willing to invest in that project, and maybe the project has a repayment over 5 years, we'll assist in doing the due diligence, help with the rules on the loan so that the investor knows he's in for 5 years. We look at risk mitigation. How can we take out insurance and all sorts of things to protect the investor? But the risk is really on the investor. And then GIG, in this case, is only the recipient of the investment from the investor. And GIG uses that investment money and lend it out to the lender and then recover it over the period of the loan, whether it's 3 or 4 or 5 years. And then if you go back to that website I showed you right in the beginning, depending on the risk category, we recommend the following brackets. If it's a low risk, like let's say I've got a house and I don't want to owe the bank anymore, I'm willing to rather pay investors, then I would be, if I'm the lender, I would pay 9%, but the investors would be able to receive 7.75%, and that 1.25% is then admin fee taken by GIG for the administration. If it's a more higher risk, let's say I've got a credit card that I need to pay off and my parents or a friend needs to invest money, then if we do it through this mechanism, then it's called a medium loan. I end up paying 12%, but the investor gets 10%, 2% is an admin fee. And then there could be a higher risk, a new business starting, and we take as much protection as we can, but it's still a high risk new business kind of idea. Then the lender will pay 18%, the investor will get 14%, and 4% will be admin for GIG, who has now to do a few more things to protect the risk and work on the risk mitigation. All right, so that's just the picture of peer-to-peer. But this is something that we can work in any direction. So the big thing is, if you have a need for money and you can find an investor and you can make it easy for the investor, what GIG then does is basically just take the personal relationship out of the way so that it's a formal transaction. And now we can cover peer-to-peer loans, whether it's 5,000 Rand or 50,000 Rand or 5 million Rand, it can be handled this way. All right, provided there's a project or something what the money is needed for.